Canada's inflation rate is down again month over month. So why does it feel like it isn't? Also, what does that mean for interest rates? Will they come down sooner than expected? I'll dive into that. Also, take a look at the latest stats and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me. I'm Lambros Demos on this Wednesday afternoon, and a little bit nervous today, excited as always, but nervous because I am using a new format for this live. I'm using my desktop instead of my phone, and also streaming to multiple channels at the same time. So hopefully it works. So please, if you can see me, and more importantly, if you can hear me, please comment or like and let me know. And let me know where you're watching me on, because as I said, I'm not only on Instagram, but I'm also on Facebook, on LinkedIn, as well as YouTube. So let's hope this works. And if it doesn't work, I'm going to have to do it all over again. So ask your questions as always, and welcome to the show. We're going to kick it off with the inflation, which came out yesterday. Canada's CPI, which is the Consumer Price Index, or the headline inflation, call it what you will, came in at 2.8% year over year. And that's down 1 percentage point from January, which was at 2.9%. And it surprised a lot of people because a lot of the economists were saying that it was going to come in around 3.1%. So anytime that the actual inflation rate comes in lower than expectations, it's good news, right? It's good for the market. It's good for people's optimism and consumer confidence, et cetera, et cetera. And it gives hope that interest rates will be coming down sooner than later. But before we get into interest rates, let's dive a little deeper into this inflation and see exactly what went into it, because a lot of people are questioning this 2.8% because they're feeling that it should be a lot higher, because they've seen gas prices go up, they've seen rents go up, they've seen a number of things go up. So it feels that it's a lot higher than it actually is. So just to break it down from the from StatsCan, basically, the things that are bringing inflation down, surprisingly, are cellular services, right, and internet access services. So, i.e., Rogers and Bell, for the most part. And it says here, when they break it down, consumers who signed on to a cell phone plan in February paid 26.5% less year over year, following a 16.4% decline in January. And similarly for internet services, they fell 13.2% year over year, stemming from a monthly decline of 9.4%. So what does all this mean? It basically means that Rogers and Bell and all the other service providers are catering to new customers, right? So you, as a current customer, if you're on one of these plans, you're kind of getting screwed because all the new people are getting better plans. So what I would suggest, if you're with Rogers, for example, give them a call and say, hey, you know what, Bell is offering this great deal for me as a new customer. So what can you do for my current plan, so I don't move over? In essence, that's, you don't have to phrase it exactly that way, but that's the kind of the idea that you have to give them in order to basically negotiate for yourself a better plan. Just because you're stuck in a 2-year or 3-year plan doesn't mean that these service providers aren't willing to renegotiate that and give you a better deal, because they want to retain you as a customer. As much as they're looking out for new customers and trying to get more new customers, they're trying to retain their current customers. And the last thing they want to do is lose you and other customers to the competition, which basically is Bell and Rogers. So if you're with Bell, give Bell a call and tell them Rogers is giving you a deal. If you're with Rogers, give them a call and tell them Bell is giving you a deal. And you may be surprised and see how much better they can give you in terms of your cell phone plan and internet plans as well. Okay, and the other thing actually that's bringing inflation down a little bit is food purchased from stores, which may come as a surprise to a lot of people, including me, because every time I go to the grocery store, it seems that prices keep going up and up and up. Lemons the other day were $1. Limes for $1. Avocado is like $2. I love orange juice. I drink it every morning, and that's the jug that I buy was typically around $4.50 to about $5. Now it's selling for $6 and in some cases $7. So from the consumer's perspective, it seems that prices keep going up. But remember, this is inflation deceleration. It's not deflation. So it doesn't mean prices are coming down. It basically means that they're not going up as much as they were before. So year over year, maybe they went up this much, and then the year over year next year, they only went up a little bit this much. So that's called deceleration. So prices are still going up, and it still feels like you're paying way too much for these groceries, and you probably are, unfortunately, but it doesn't mean prices are actually coming down. So just keep that in the back of your minds as well. Now, on the flip side, what's actually driving inflation upwards, surprise, surprise, is mortgage interest costs and shelter costs. And those who have been watching me for the past few months now know that I have a real beef with this, because it's like the dog chasing its tail. Okay, so Bank of Canada wants to see inflation come down, right? So they're basically increasing their interest rates to bring inflation down. However, inflation keeps going up because when they increase interest rates, they're pushing the mortgage interest rate costs up, and that accounts for about 30% of the inflation. Okay, so if you remove mortgage interest cost from the actual inflation number, it's probably going to be, some economists predict it's going to be around 1.5. Others are saying around 2%, which is exactly in line with the Bank of Canada's target rate. And that's basically where they want to be at this time. Sorry, just some technical difficulties here. Looking for these tabs. Again, this is a new format that I'm using. I apologize if I'm not for the delays here and there, if there's some technical issues. But if you're watching me, please make a comment or ask a question. I love questions, and I love this to be an interactive show. And even if you're watching this on the replay, by all means, you can still ask your questions, and I'm happy to answer them as soon as possible. All right. So we said that mortgage interest is driving inflation up, and accounts for about 30% of the inflation numbers. So I don't think that the Bank of Canada is going to continue increasing rates. I think we can all agree to that, because inflation is high enough already. Now, what they're looking at is when to decrease interest rates. Okay, some people are predicting April, which is next month, which is actually the next time that the Bank of Canada will meet to make an announcement. They meet on April the 10th, which is about 3 weeks from today. And they're going to use today's inflation numbers into their consideration. But they don't only look at the headline inflation, which is the 2.8%. They also look at other things like the core inflation number. They look at the employment numbers, the job numbers, the GDP. So I believe there's a GDP announcement and a jobs report coming out before the next announcement. So that will also factor into their decision. But from my perspective, in my opinion, and I've said this before, I don't think the Bank of Canada is going to make a move based on 2 months of inflation coming down. I think they're going to wait a little bit longer. So the next announcement after April the 10th is in June, the first week of June. And I think that's when you may see a cut in the interest rates if inflation continues to drop, or at least stay at this level. If it goes the other way, however, then they may delay the cuts again. And there's actually a good chance that inflation may pop up in March. Because if you drive a car, you know that gasoline prices have gone up month over month. They're much higher today than they were even a couple of weeks ago. They're over that 150 mark on a regular basis, whereas before they were in the 130s or low 140s, that kind of thing. So gasoline prices are an issue. You're going to definitely see that go up. And I apologize for any noise that you're hearing above here. I guess someone's renovating upstairs. So that's the other thing. Travel tours as well were also part of inflation going up. And you're going to see that go up as well for March, because what did we have last week? We had March break. So a lot of people were taking their vacations for the March break. And I'm sure airlines and destination companies, jacked up their prices for that particular period. So you'll probably see travel tours go up. You'll see gasoline prices go up. And you may even see rents go up as well, as the rental market is heating up again after a little bit of a slowdown over the winter time. So all these things may push inflation upwards. And if the other side is not bringing inflation, if grocery prices, for example, and cellular services, for example, aren't enough to balance that out or bring the inflation down, then you may see inflation creep up again in March. But we'll definitely keep you in the loop on that when it comes time for it. All right. So moving on, let's jump into the stats. So speaking of things slowing down, I looked at the stats week over week, and it's definitely not typical of March, right? Because in a normal year, you would see activity increase, showings increase, listings increase, sales volume increase week over week in March as we kick off the spring market. But it's been a rather slow start to the spring market. And my feeling is that a lot of people are waiting for interest rates to come down before they make a move, i.e. list their houses for sale or purchase something. Now, if you're waiting to purchase something with interest rates coming down, unfortunately, it may backfire, because historically, when interest rates come down, home prices go up. And more people will be jumping into the market as well when interest rates come down. So your competition will go up. Even if home prices do not, the competition will certainly go up, because now more people will feel more confident to buy, more people will be qualified to buy. So you're going to see competition heat up, certainly, as interest rates come down. So if you can afford to get in now, if you qualify and you find something that you like, my advice to you would be to get in now and take out a short-term mortgage, whether it's a short-term fixed rate or a variable rate, because you know that, well, you don't know for sure, but chances are that interest rates will be coming down. And I think that would be the smartest thing to do at this point in time, because mortgage rates are temporary, but real estate is permanent, right? What's the old adage? Date the rate, marry the house, something like that. But it's true, because for me, anyways, real estate is a long-term investment. So unless you're planning to flip the property or something like that, then I would advise you to get in now, and just ride it out for the short term at the high interest rate, and then enjoy the benefits of your monthly payments coming down if you're on a variable rate, or when you renew in a year or 2 years from now, interest rates will be a lot less for sure. And here we go with the drilling. I apologize for that, folks. All right. So quickly looking at the stats, we'll go through them. Hopefully you can hear me. Listings have come down about 7% in Toronto. Oh, this is very annoying. Give me 1 sec. Okay. So as I said, listings have come down in Toronto about 7%. Sales volume has come down only about 5%. So the market is indeed slowing down week over week. Both demand and supply in Toronto, but demand a little bit more. A little bit opposite in Peel region, as listings are pretty much flat. We had 597 listings last week, new listings rather, and 598 listings this past week. So very flat for listings, but sales volume went up about 10%. So that's a good sign in Peel. As far as showings go, not much change there either, only about 0.5% increase in showings and 2% drop in offers in Peel. In Toronto, as I said before, 7% drop in listings, 5% drop in sales volume, 2% drop in showings, and about a 14% drop in offers. So again, a lot of people may be waiting for interest rates to come down before they actually buy something, which from a buyer's perspective, it may not be the best thing to do, but from a seller's perspective, it may be a good thing to do. So maybe that can explain why the listings aren't there yet, because typically we see an increase in listings in this time of year in March, but sellers may be waiting if they can afford to wait, and it appears that they are. Waiting for interest rates to fall because they know that prices tend to go up when interest rates come down. So that's why you may not see too much inventory out there on the market, at least new inventory. And as far as days on market goes, things are selling slightly quicker in Toronto, about 2 days faster, and things are selling about 5 days slower in Peel region. And it's very interesting when I look at the average price. Okay, I mean it's a very small sample size, so there's no point in diving into the details of prices at this point, but there's a significant drop week over week in Toronto in prices. So that tells me that there's more high-rise condos and maybe townhouses being sold versus low-rise, more expensive houses. And the opposite in Peel, as prices significantly up week over week. So that tells me there's more low-rise homes, more expensive homes being sold versus condos and townhomes. So that's that in a nutshell. Don't see any questions here unless my tech is not connected properly. But if you are watching this and you have a question, by all means, go ahead, ask it. I'm happy to answer the questions. Again, I apologize for the tech issues and the noise. Just experimenting with a new format here, and hopefully it worked out. So as always, take care, and we'll see you next week.